Welcome back, everyone, to another market recap. Today is November 6th, 2024, and we have 5 different possible trades you could have taken today. This is one of the best and easiest ways that you could possibly study. I'm going to be reviewing all the different trades for you, so all you have to do is sit back and relax and watch as I talk about the different trades you could have taken. Now, if you're new to my channel, my name's Jake. I make daily videos on ICT concepts as well. If you like this type of content, definitely consider subscribing, liking, and also checking out my completely free Discord. The link is in my YouTube, in my bio. So with that, let's talk about the different trades you could have taken today. So first, going into the morning, we swept out London's lows, and we had a giant overnight session for Asia. This was because of the presidential election. We got results on that overnight. That was crazy. Trump won the election, so crazy stuff. And anyway, we were delivering from this 1 hour for value gap going into the morning, drawing towards, what was this? Previous week's high and previous month's high overlapping with each other, making this a super strong draw for the market to go to. So, having swept London's lows, and I will note that we also reacted off of, if I can pull it up, we reacted off of the midnight open. And remember, in my video today, I mentioned how you can use these key times as support and resistance levels. So we push down right below the midnight open, and we get a reaction. So I thought that was pretty cool, since I mentioned that in my video today. But anyway, we sweep London's low, go on our way back up, The market was drawing towards London's highs. It was drawing towards previous month's high. It was drawing towards these equal highs. And so we were looking for a trade to the upside. Now, the best opportunity was this 2-minute inverse fair value gap. When we closed above this old 2-minute gap, that would have been your entry right here. Entry right here. Stop loss at the low or below the candle body, and targeting these equal highs, and then as well leaving runners for London's highs and also previous month's high. And at the max, this trade would have been a 4.5 to 1 risk reward trade. This trade is from Camel Trades as well. I would have caught this too, but I was setting up my indicator, so I missed it. But you can see here that Camel Trades marked this out. And yeah, very good trade from Camel Trades. The only thing is this, depending on where you had your stop loss to break even, this could have been a stop loss to break even. You can see you would have got break even here. But if you just held it, this would have worked out. But at the worst case scenario, it would have been break even. So, as well, this is also a breaker block trade. You can see this trade from Hydra, where you have a low, a high, a lower low, a higher high. So this is the breaker. He enters on the retest of the breaker, which is overlapping with this fair value gap here. So I'm going to get rid of that. Get rid of this on the chart for a second. You can see here, here's the breaker, this low, high, lower low, higher high. So here's the breaker, the series of up close candles. And then this overlaps with a fair value gap. You see that? So your entry would be at the breaker or in the fair value gap, depending on where you want it. Same thing, entering at that fair value gap, stop loss below the low, and also these lows were protected by an SMT. It's important to note that. So, same thing, targeting those equal highs, London's highs, and previous month's high. And we went straight to previous month's high, and then we got our reaction, and that's how you know the market's not random. It purposely was trying to target this liquidity pool, this previous month's high. So very interesting stuff. So that's 2 of the trades. We have this, which was a loss, but it was still a good trade, so I'll cover it. We had equal lows here, relatively equal lows, and we had an inverse fair value gap. So we were delivering from a fair value gap. We got to close below. That would be your entry. and you would target these lows, but this one would not have worked out. And a big reason this didn't work out is because there was an SMT at these lows here. So important to know when there is an SMT, and that way you probably would not have taken this trade because you would have saw this SMT. So I think that is the big reason on not taking this one, because there was an SMT at these lows. So you really have to be careful when you're going against an SMT. Next, we had this one from Camel Trades, which I think was excellent. He shows how we had a 30-second inversion after sweep. So first, obviously, we swept previous month's high. Remember, that was like right here. Then we swept out this high, and after that happened, within 4 to 5 or less candles on the 30-second time frame, we get this inverse fair value gap. So you enter on the close below after sweeping it, and then your stop loss goes above the high or below the IFG candle, whichever one you want. And then in this case, you have this, which is a higher time frame fair value gap, right? So this is like a fair value gap on the 2-minute chart or 1-minute chart. So I personally would have taken off a lot here and here. I don't really know if I would have probably held some here because there were equal lows, but they did not get hit. And you can see that Camel Trades was holding to those equal lows, but did not end up getting hit. So that's why you take partials on the way down, and you would have got stopped out the rest at break even. Then lastly, we have a trade from Dodgy where he shows how after this trade that failed, he wasn't bearish. He said shorts would probably get wrecked because Trump won the election. Now, I don't know. Like, that's not that I get what he's saying, but like I don't know. I feel like the shorts could have worked, but you never. I get what he's saying though. So anyway, we got that inverse back to the upside. After that inverse back to the downside, we got the SMT at the lows, and we closed above here. And then this would have been a nice just 1-to-1 risk reward trade, nothing crazy, but this would have been not bad. I think this was on the 30-second because I don't really see. Oh, hang on, it was on the 5-minute. Hang on a second. Okay, yeah, it was on the 5-minute, and it was when we closed above this fair value gap here on the 5-minute. So when this happened, you would enter here, targeting this high. So nice 1-to-1 trade from Dodgy. Now that we've covered all the trades, I want to zoom out for a second. And yeah, just show how like we did push the reason we were bullish going into the day was because we pushed it out into this 1 hour fair value gap, a 1 hour order block, and we had this previous month's high here. I was gonna say something else, but I can't remember right now. So with that, I hope you found this video helpful. I hope you enjoyed it, and I will see you guys in the next one. Bye.